Good morning, Bay Area. This is John Payne, the host of Real Estate Radio Bay Area, and this is the RateWatch Now Daily Update Report. Happy Monday, everyone. Let's go ahead and jump into it and get started. Here is a snapshot of the mortgage-backed securities market from Friday. Started up very nicely. You can see we actually had four different price alerts here. Started out kind of nicely, and right around 8:30, people started taking their profit and running for the border, running for the weekend. So you can see the net effect of that. We did see prices adjust down slightly on Friday, but we had a gap opening this morning, and I'll show you that later on. What's going to make rates go up today? We had the National Association of Home Builders Index come out. It's actually up to 16 from a 13. Now that may sound somewhat impressive. However, we need a 50 plus to reflect the confidence that consumers will have in homes again. And so, although we are up by 3 points, we still have a long way to go. Uh, Production, manufacturing, these numbers are out. And for the industrial production, this is the first time since July of '09 that this number has been down. So again, we have two of three of the major components that we're looking at to pull us out of this rut we're in economically, and it is homes and production, and neither one is really doing well, and we all know about unemployment. Don't mean to be a pessimistic on this information, but I am just giving you the raw numbers and what the numbers are telling me. We have a very slow week, nothing earth shaking here. Next week, though, we do have, I believe, GDP coming out, so stay tuned for that. But so really, it's going to be a fundamental week. The fundamentals are really going to take over. I'm sorry, the technicals are really going to take over this week because the fundamental news is just not there. You can see what the market has been doing so far this morning. You can see how lenders are reacting to the market, pretty much a split down the middle. Looking at the technicals, you can see that we do have a downward trend slope going. This is going to be imperative today because as of Friday, I mentioned that this par 80 would be a source for us to whether or not we're going to hold that floor, and we didn't. We came through it. So now our floor has moved down to par 60, and this is going to be a test for today as to whether or not we can bust through this trend line. Now, we don't really have any fundamental news, so the technicals are in charge. So if we go through this downward trend, you can see us possibly running up towards the 101.4. However, we may go up, but I think that ultimately, because the technicals are in charge, we're going to come down and probably test this par 60. But either way, today, again, if we hold through, if we break through, we're going to make a run up. If we don't, we're going to fall down. And you can see in sideways tradings, we go up and down until something happens, such as the Fed mentioning something else on the quantitative easing 2. If that QE2 information comes out, be it good or bad, we're going to go in the way that we need to go based upon that news. In summary, manufacturing is weaker than expected. Home builders are seeing slightly increased traffic. Like Newsweek, the technicals are in play, which means that any fundamental news that comes out will have a exponential impact on the market. The market is at a crossroad, and it is compressing, and we will most likely test the par 60 without something on the fundamental news side happening this week. So we just have to just wait and see. That's all I have for you today, Bay Area. Please make it a great week. Also, keep in mind that this Saturday from noon to 1 is my first radio show on Fox News Radio for Real Estate Radio Bay Area. Please tell everyone about it. Please tune in. If you know of anyone that could benefit from my morning updates, please pay it forward. Until tomorrow, Bay Area.